Okay, everybody, here we go. It's me, Gregory Mannarino, and I'm in a really great mood right now. That's why I'm like a minute early. It's 4:04 p.m. I'm dead on it 4 or 5 p.m. Eastern Daylight Time with these wrap ups. Here we're gonna wrap this up right now. Um, you know, before we even get started, okay, it seems like there's a whole bunch of you out here that are absolutely shocked at what is happening to commodities here. Like you didn't know this in advance. Of course you did. Um, and if you subscribe to my newsletter, my free newsletter, um, and if you watched my video that I did Sunday, my markets look ahead, I explained to you that this was a very likely scenario. As a matter of fact, I put this out earlier today in my free newsletter. If you have not subscribed to my free newsletter, do it right now. There is a link in the description of this video. Anyway, on Sunday, I put a paper out, published and put it out in my newsletter, which was titled "More Central Bank Currency Debt Manipulation and the Greatest Transfer of Wealth in History." Okay, so before this whole route with crude oil and gold getting hit, the commodities getting hit over the past couple of days, this is what I wrote. Again, this is why it is imperative for you. It's free, so I don't know why some of you are not subscribed to my free newsletter or don't read this stuff. It's always usually short, but this is what I said before this all happened here. Here we go. What the Federal Reserve will accomplish here, along with other central banks who will also indisputably be buying more debt and continue to manipulate their own currencies as well, is vastly exacerbate the already monumental price distortions which already exist across the spectrum of asset classes. The game will remain risk on. Risk on alludes to a situation where suppressed rates will open a doorway where cash flows into risk assets. The stock market. We just finished the best week and a half in the stock market since November of 2021. Risk on, in turn, inflates an even larger stock market bubble. Here's the kicker or the key here. Risk on also causes the price action of other assets like commodities to remain low, which presents an opportunity to attain these risk-off assets at fire sale prices. So you knew this. All of you out here are saying, what's going on? What's what they always do. When the market crashes or when things don't go their way, they say, nobody told us. Nobody told us. Nonsense. I told all of you. We discussed it right here, people. You got to pay attention to these things. What happened last week with the Federal Reserve here not raising rates, keeping rates static, okay, is several fold. And we covered it again. Massive debt buying. Did you watch what happened to the 10-year yield last week? We dropped 50, more than 50 basis points. We're over 5% on the 10-year yield. Now we're at about 4.5%, 4.51 last time I looked at it as the bell closed. Okay. And what else is the Fed doing? They're selling dollars and they're buying foreign currencies. This is massively positive for the stock market. Henceforth, why we just finished the best week and a half in this market in the last 2 freaking years regarding to the S&P 500, which did finish positive again today. And why you're seeing pressure on commodities, okay? Look, I don't know how to say this another way. I really don't know. Maybe one of you can help me out here. Maybe Alan. Alan, you're with me all the time. Alan Greenspan, my buddy, Joe Potter. One of you guys can help me out here. How do I explain to people that they have to look for opportunities like these? Because this cannot go on. It can't go on forever. They're inflating the debt like we've never seen before in the history of the world. We know for a fact that they're artificially suppressing rates, which is creating this environment that we're in right now, which is there's been nothing like it in the history of the world. Nothing like it in the history of the world. Right, Perry? Perry's going to tell you too. All right. The distortions that currently exist in this market, first of all, they're going to get worse all over the place. Again, have been deliberately created by collectively by the freak show of central banks who have been buying it all. And when they buy it all, when you have a president or a pumping the economy, pumping the market, after they call it a big fat ugly bubble, what do you expect to happen? Things are going to be lovely and you want to frolic all over the place and go, yes, things are beautiful. No, it's an illusion. It's not real. You understand? It's going to get real. And it's getting real for a lot of people right now. But suppressed rates create a fake, false environment where you get hyper bubbles to the upside, hyper bubbles to the downside, and all this is going to get very real. Again, at a time of their choosing, the central banks are going to fuel the hyper debt bubble, I think, more so than we've ever seen. The Federal Reserve, you have to understand, central banks are, I would say, desperate, might be a good word, to pump the market. Again, I don't know how many times I've said this either. People, help me out here. Goldstein, help me out here. Okay. How many times have you heard me say the illusion of the market? The illusion of the market creates this twisted perception of how things really are, and people get off. They spray all over the place when they see their 401ks going up. Oh yeah, oh it's great. They ignore everything else. That's not what's going on here. This is not a real market. There's nothing real at all about what's going on here, and these delusions are only going to get even worse. They're only going to get worse here. So again, people, stop with the no one saw this coming. We all knew this is coming. The commodities smackdown, first of all, it ain't going to last. That's number one. And with this whole war, the war is expanding, okay, in case you don't know. A lot more people are going to die. Yes, of course, this is extremely positive for U.S. GDP. Oh, they're going to sell you that one. Wait for that one like they did last time. We called that one perfectly. We nailed that one to the wall. So they're already laying the groundwork here for the next GDP report, which is going to be off the Richter scale. And they're going to tell you how fantastic our economy is doing, but they're not going to tell you that it's all these hundreds of billions of dollars that they're using to fund this war and that war and everything else. It's a lie. You all know that. Anyway, people, what else can I tell you? Looking over here at the market, honestly, we got, again, a Dow that finished slightly in the negative. S&P 500, this is the best week and a half we've had yet since the Fed decided to pump the market, buy more debt, weaken the dollar as well on a relative strength basis. And we haven't seen anything yet. Look, they want you to believe, and this is what gets me more than anything else, that this situation here of worldwide global inflation, again, not just a phenomenon because of the freak Bidenstein mummy man. This is a worldwide phenomenon. Okay, this is central banks collectively who are fulfilling their goal, their end game, to inflate, to devalue the currency for 10 years, literally 10. You and I have sat here, some of you have been with me that long, and we've talked about what central banks are doing. It's a race to the bottom. They're just sucking the purchasing power of their currency away. And where's the uproar? Where's our so-called representatives? You think they don't know what's going on? Oh, yes, Loretta Mester, the ghoul of the Fed. She's leaving. She's leaving in June. I wonder what other thing they're going to replace it with. It's going to be another creature, I can only imagine. Another freak. Anyway. So, look, it's not going to stop. Rate suppression, commodity prices, not going to last. It's not going to last at all. Okay, we understand risk on, risk off, period. Right now, this engineered environment of risk on, it's engineered, again, easy money, is a godsend to those of us who understand that commodities are the place to be moving forward. I don't know. Look, you and I, we get it. We're looking out there a little bit. Okay. Most people live in the moment. They don't think beyond even tomorrow. They live like their lives like animals. Animals live in the moment. They don't consider the past. They don't think about the future. But you and I understand the dynamics here. The dynamics here is very, very simple to understand. Risk on. This is deliberate. Central banks are not done. How many times have I told you over, I don't know how freaking long? They're not done. They're not done. They're not done. The illusion of the market. They're going to prop it up. And now they're going to find other ways to do it too. They're going to find more ways to push cash into the perceived safety of debt. And that means the expansion of war, more death, more suffering, more pain. That's how that's going to go. Pretty obvious. Okay. The Fed, look. Let me just get myself squared up on this chair a little bit. Central banks, again, are the number one propagator of war around the world, and they fund both sides. Again, where does the cash come from to fund these wars? Do we have it? No. Is there a single developed nation in the world that has it? No. What gets a central banker off more than anything else? More debt. What does central banks want to do? Inflate. So you understand this mechanism here of war, of pulling more cash into the now, of creating fear, will drive cash into the perceived safety of debt, and that's what the Fed wants to do. This is why this resolution that they passed, all means necessary to prevent Iran from getting a nuclear weapon. They're waiting for the right moment to unleash some kind of false flag to get people to back it. You understand? People don't want war. People don't want war. They're sick of it beyond their eyeballs. But that doesn't matter. They're going to force you to back it because, again, they're going to create another 9/11 as they always do. Okay, and Pearl Harbor and all this stuff. You think this stuff was really by accident? None of it is. None of it is. And they all know about it in advance. Oh, there is those privileged few who know. Thank you, Carlos. I appreciate it. But you and I, we got to sit here and put these puzzle pieces together and come up with the most likely scenarios. And I think for the most part, you and I have been so far ahead of the curve, it's unfreaking believable. And we're not done. We're going to continue to put ourselves in the right spots, let them play their games. We're going to play our games. And that's it. That's where we're going here, people. Period, the freaking end. Anyway, what else did I even want to talk to you about? With regard to other assets, again, crude oil got hit today. Gold got hit today. Silver finished about flat. Crypto's put on a slight gain today. The dollar, which was higher earlier, did reverse. We finished slightly in the negative with regard to the dollar. And then we're talking about on a relative strength basis. But again, because all central banks are crushing their own currency at the same time, sucking the purchasing power. How do they do that? By inflating. You see, this is what you're not supposed to know, and it drives me nuts. When you hear a president, a politician, or whoever it might be, talking about funding for this and funding for that, hundreds of billions for that, and then whatever they want to spend, it's inflationary. You can't just create cash from nothing and buy assets or whatever it might be and expect there not to be fallout from this. You understand? Nick gets it. Yeah, operation stuff your gobble. Really, they want it deep, man. They want to give it too deep. And I mean, deep. And we're taking it too. I mean, who's paying for all this? We're paying for it. We're paying for it all in the form of inflation and the form of an economy which is in the toilet. Oh, that's another thing. That's another thing. We got major retailers, more of them crawling out of the woodwork, seeing the consumer's weak. Credit card debt. So you and I have talked about debts and deficits for how long? How they're going to go up and up and up and explode higher. Thank you, Dan. I appreciate that. Okay. Yeah. Without lube. I mean, it's just not going to stop. This is what it's designed to do. Create slaves to the system. Now we have people again. Now, not only does it cost over $1 trillion a year to service the debt, and this has more than doubled in just 2 years. You can imagine where we're going to be in 2 years from now. 3 trillion, 4 trillion, pick a number. Okay. Whatever it is. And people are going to turn their head. They don't understand that this is sucking up cash that's supposed to be used for we, the freaking people who are supposed to be governing ourselves. We don't govern a thing. Do you realize that? Not only do we not govern a thing, our votes don't matter anymore, which is the same scenario, the fall of every empire, and that's what's happening now. This fall is deliberate. This is central banks collectively destroying the global economy to issue in their new system of maximum control. How many of you disagree with that? I doubt there's a handful of you. Of the thousands that are going to watch this video that would disagree with that. And that's where we're going, people. But again, I know I'm sitting here and I'm preaching to the choir on this. But anyway, it's just a sick thing to watch. And people want it. Do you realize that people want it? There are people who want to be, whose greatest dream, they don't care if they have to live in a shotgun shack. Okay, they want to be taken care of from cradle to grave. They don't want to go out there and maybe be competitive or live in a free society. Because living in a free society means you are free to, a real free society gives people an opportunity to either be successful or fail. You understand? You're not allowed to have that anymore. Everyone gets a trophy in these days. This is like, if you look back on history, you'll see that democracies go through phases, socialism into full-blown fascism and whatever else we're going into here. I mean, do your own research on history. People have no clue. You know what I mean? But this is what we're seeing. And it's the people now that are being pushed down to the lower rung of society as this neo-feudal system is in our freaking face, who are the ones looking to be taken care of at the expense of everybody else. I tell you, people, man, it's just so sick what we're seeing here. But it's not going to stop, and you've known that for I don't know how long. It's not going to stop. If you're expecting this to change with the next president, no matter who it is, it's not going to change. It's not going to stop. Okay. The wheels have been put in motion from over a century ago. Central banks have played their hands perfectly, and they've put themselves in a spot to be world control, which is what they've wanted to do since the inception of central banking. Private institutions running the global economy, running the global financial system, running the global markets. How do we allow this to happen? How? Because again, people don't want to deal with it, because it would take effort to govern ourselves. So we give up our freedoms, we give up our liberties, and we allow some freak to dictate what we're supposed to do. We're backing this war. You remember yesterday, the United States is prepared to take military action. Really? I ran a poll. Like 3% of you are willing to step up. 3%. It's incredible. But they're telling you what you want because they get to dictate the rules. Our loving, caring representatives who work for the central banks. They don't work for you. Am I clear on that? I hope so. People, you got to help me out here. I only got 475 thumbs up. That's disappointing. We got to do something with that. We got to get this video out there, and I count on you for it. All right, people. Anyway, Zeus, you know what? It may go to 50, but I would like to hear your scenario. Why crude oil is going to 50? Look, I'm always willing to learn something here. Okay, so you can tell me where you think why. I want to hear why. Greg, crude is going to whatever you think it is. And these are the reasons why. Don't just come up with these things out of your head. You know what I mean? Let's make a case. Well, going to 52 to new. No. You have to understand that crude oil is priced in dollars. Okay, at least for now. Although there's a big move to sidestep the petrodollar, which will lead to more death and everything else here. Commodities are priced in dollars, and the dollar value is evaporating, and that is going to weigh very heavily on things moving forward here. And again, look, why are we holding commodities? Why are we holding gold and silver? Not because we're expecting it to go up tomorrow. We're holding this because we understand that this hyper bubble in debt is going to blow up. It's a ticking time bomb. It's ticking louder. It's ticking faster. And it's being fueled. We are still in case you maybe don't know, a full-blown liquidity crisis on an unprecedented scale. But they're going to keep propping this up more so, I think, than ever before. They have to, because the system demands that debt be pulled into the system exponentially. It can't remain static. I want you to understand something, okay? If, in fact, the pace at which debt is being pulled into the now remained static, we would turn into Mad Max in a matter of weeks. The debt must be exponentially added to just to maintain where we are. You understand? And a big part of that is, the interest to service the debt as well. Again, you realize, and I went over this so many times before. So the Federal Reserve, which is neither federal nor reserve here, they get to dictate the rules of the monetary system. We get to sit there and take it straight and deep in the gabagool. I think that's pretty much where we're at. Okay, now with that, not only do they get to issue as much debt as they want to, and the more they do, the stronger they get. They can issue that debt to anybody. That's why they fund both sides of conflicts. We are not allowed to know where, for example, the Federal Reserve, who they can lend to anybody. Do you know that? Yeah, with no oversight whatsoever. And not only that, they get to charge interest they created out of nothing on the cash that they lend out. It's an astonishing thing, isn't it? What a business to be in, to be a central banker. It's got to be the most great. Well, Loretta Mester, she's retiring now with, I don't know, she's a multi-millionaire. How does that work? She's served the Federal Reserve very well. And of course, she gets to leave with millions and millions of dollars, just like the other freak who got caught red-handed here. Oh, I accidentally made trades that they just happened to pay off to the tune of millions and millions of dollars. It was an accident. I didn't mean to do it. Just happened to work out that way. Make it up. Make any of this stuff up. You know what I'm talking about. It's freaking nuts. What was that guy's name? You know what I'm talking about. I'm drawing a blank here. Whatever that guy's name was recently. And they sold that to the public, that these trades that he made that were massively profitable out of his own account, they were by accident. They were accident. No, it wasn't Madoff. It was a Fed president. Let me think. Oh man. Anyway, you got bullish on Mester. It's pretty crazy, isn't it? When is the grid going down? When they wanted to. Was any of this Bostic? There you go. Goulstein, you rock. Fed President Bostic, the accountant. Both of you guys nailed it. Yeah, Fed President Bostic. He accidentally, it was pure accident, made trades when he wasn't supposed to because it would break the Federal Reserve's ethics rules, and he made millions. And he got to keep it all. Yeah, because he proved it was an accident. He proved it. So because it was an accident, he gets to keep it all. And you and I, we get, Yeah, that's what we get. How does that work? There's someone around here that's smarter than me, which is probably all of you. In fact, I'm sure it is all of you. Anyone want to explain that to me? Because you see, I'm not that bright. You get it? All right, look. So I don't get in trouble. Now I will open the floor to you guys and girls. Let's do some questions here because people don't like it when I don't see all the questions all the time. People, I apologize for that. We'll cover some questions. When guitar? My guitar, I haven't even unpacked it yet. It's somewhere in this disaster. You can't. All you're seeing is back here, but over here, I got all kinds of stuff. Well, you can see the window, right? I don't even have a shade on here right now. Things are not looking too good, but my guitars aren't even unpacked. And yes, I am wearing pants, but they're not very nice. But I am wearing pants. Freebird, great song, great guitar solo. Tangible metals, yes, man. You know my take on this, people. I can't say this again. I believe in having hard assets, holding hard assets. You all know what my favorite asset is, and silver, and you know why. I don't just say silver is my favorite asset because I like it because it's pretty and I can lick it and smell it and whatever else I wanted to do and rub it all over my masculine body here. No, that's not why. I've told you why. I look at the Dow gold ratio, gold silver ratio. Then I try to figure out, well, where's the Dow going? If we know the stock market is somewhere beyond la la land, and I mean way beyond la la land, where's the bottom of the Dow? I mean, we know the Fed jumped in there at Dow 6,000 and started pumping the market. Where the bottom is, I don't know. It could be 6,000. I believe we're going to get a 1-to-1 with gold and a 15-to-1 or maybe even a 10-to-1 in an extreme situation with regards to silver. So that's how it's going to play out. And that's how I've said that exact thing for 10 years. I have never wavered from it. And I believe that's the way it's going to play out here. Anyway, people, chances of the government confiscating gold or silver, I think, are extremely low. Because we're never going back into a commodity-backed system, so don't even worry about it. The power of a central bank resides in one thing, and they will kill, maim, and slaughter millions of people to keep that power, and that is their ability to propagate the debt-based system. So I don't know who's spreading rumors that there's going to be a gold-backed system. It won't be gold-backed ever again. We've let that go. That ship has freaking sailed. It's gone. It went down with the freaking Titanic, and we're never getting it back. So, the central banks are they got us by the you-know-whats. Bank of America. I already told you about Bank of America. Of all the banks, there's a couple of bad ones out there, and Bank of America is one of them. I think they have a very high probability of going down. There's a couple of other ones, too, that are not looking too pretty as well. Wells Fargo. Yes, Joe. That's another one. Absolutely. 100%. So, but look, the situation here. And I've outlined the issues of these banks, why they're in trouble, what's going on with these banks for a very, very long time. And, look, at least, I hope you're taking action here. It's just sitting here, listening to this stuff. I always tell you this blog is fun and we like it, and we have a lot of good times here, absolutely. But it's serious business that we're talking about. You gotta get yourself in the right places. You gotta lessen your risk to the system. As we have already been told, the FDIC has already warned us, and there are hundreds and hundreds, maybe even thousands of banks that are failing. But we don't rank high enough to know that which bank. We can keep our cash in these institutions, but it's privileged. And that word privilege that the FDIC used, privileged, it's privileged information which banks are going to go down. As a matter of fact, there's no warning. When a bank goes down, in case you don't know, there is no prior warning whatsoever. All of a sudden, boom, you go on your bank's website, you find out that it's just non-existent anymore. Your assets have been moved to wherever they want to move them to, whether it's the FDIC in receivership or they take your assets and they bounce them someplace else. That's how it works. You're not even allowed to know 5 minutes before a bank goes down. So if we understand that, okay, why do we want to keep? You tell me. Somebody here, again, maybe Lava. Lava's smarter than me, way smarter than me. You got to check out Lava. She's awesome. Her work is great. Anyway, tell me why we shouldn't at least try to limit risk. Okay, like I said, when you have your cash and you deposit it in one of these institutions, first of all, we have a zero reserve system. Not many people know that, but we don't even have a fractional reserve system anymore. It's a zero reserve system. When that cash leaves your hands, it's gone. Basically, you give up all the rights to it. Most of them. It's really the truth. If you look at the fine print, no one does. Oh, sign here, sign here, sign there, sign there, sign here 50 times. Lick the paper. And then all of a sudden, you get, oh, well, now after they give you a full cavity search, a background check, credit report search, everything else, then, of course, then you can open up a savings account with these lovely institutions that have your best interest in mind. Oh, yeah, X the FDIC. But again, that word privilege bothers me because that means some people are allowed to know. Not you and not me. If we keep our cash in these institutions, does that bother you? Because it bothers me. It really, really bothers me. And you gotta, I'm sitting here preaching to the choir. Yeah, Perry, I'm not going to repeat that, but that's exactly right. Look what Perry just wrote. Infinite blank loop. The man is so correct. He's absolutely, yeah, don't sign anything. Anyway, people, that's the situation. All right, I'm going to end this video. It's going on half an hour. Come on, we can squeeze out 800 here, people. Anyway, why can't it read? I don't understand that one. Yeah, who has all this privilege, Jeff? I want to know myself. Thank you, Axiom, as well. You're all fantastic. You're amazing. Thank you all for being here. Thank you for supporting my work. Thank you for these thumbs up here. We really got to work on them. People, look, I'm going to ask you for a favor. If you like this stuff, if this is important to you and people need to hear this stuff, I want more people to get involved in the live stream. That's a fact. Okay. We need more people here. I got 1,300 right now ish. I've been in here for just about half an hour. We need more people to see this stuff, to get involved in here. So please do share this stuff, get it out there. I count on all of you to get this work out there. It's not me, it's you. It's our thing, but you, all of you are the ones that get this stuff out. So people see it, hear it, and 800 will die. Look, we're here at 810, so we don't have to die. Thank you, everyone, again. Look, I'll see all of you in the morning. Thank you, Jay. Dia, I appreciate it. I hope you're getting something out of these videos. I really do. I like doing them. I really, really do. But I don't want to sit here and blah, blah, blah for nothing. I want people to walk away from these videos and say, you know something, this is interesting. Maybe I learned something. I want you all to open your mind. Yes, I have left Nevada. I am in Florida now, Bradenton, 10 minutes from the track. And anyway, this guy, again, loves you from the heart. Thank you all for being here. I'll see you in the morning, okay? I really hope to see you there.